Hello, everyone, and welcome to Financial Accounting. Our topic today is Statement of Cash Flows. We will discuss how cash transactions are classified in a statement of cash flows. We will also look at the definition of cash and cash equivalents. And finally, we will look at the real-world example, the statement of cash flows of Tesla. The statement of cash flows helps users decide how a company gets its cash and where the cash is spent. Providing this information helps explain changes in the cash balance from the beginning to the end of the period. It is important for users to know how much cash a company has. It is even more important to know how a company funded its operations. Did it have enough money from operating activities to help pay for its operating expenses? Or did it have to borrow money or sell stock to cover for cash shortages? If so, users need to be aware of this so they can fully understand the cash flow position of the company. Cash flow information is also useful in determining whether a business has sufficient cash to pay its debts or whether it paid dividends during the year. Let's look at the summary of the components of a statement of cash flows. There are three main sections on the statement: operating, investing, and financing activities. The bottom of the statement reconciles the change in cash with the beginning and ending cash balances. The ending cash balance on the statement of cash flows should always equal the cash balance on the balance sheet. The statement of cash flows must include the following three sections: cash from operating, investing, and financing activities. The next few slides will discuss each of these activities sections. We already looked at these three types of business activities in the video called Business Activities, Financing, Investing, and Operating. I am posting the link right here, as well as in the description to this video. Let's take a closer look at operating activities. The operating activities section includes cash inflows and outflows that result from the operations of the business and some incidental business transactions. Operating cash inflows include cash received from customers in payment of goods sold, as well as cash received as dividends and interest. Operating cash outflows include cash payments for operating expenses such as salaries, office rent, inventory, taxes, and interest. The investing activities section includes cash inflows and outflows that result from the sale and purchase of fixed assets and investments. For example, if a company purchases a piece of equipment, it is classified as a cash outflow in the investing section. If a company has excess cash and invests it in the stock of another company, it is also classified as a cash outflow in the investing section. If this equity investment is sold in the future, it will be classified as a cash inflow in the investing section. The financing activities section includes cash inflows and outflows that result from transactions with the company's creditors and stockholders. For example, if a company borrows money from the bank, it is classified as a cash inflow in the financing section. If this debt is repaid in the future, the amount of the principal payment is classified as a cash outflow in the financing section. Keep in mind that the interest payment is classified as a cash outflow in the operating section. If a corporation issues stock, it is classified as a cash inflows in the financing section. Also remember that cash outflow from dividends paid is an example of financing activity. However, Cash inflow from dividends received is an operating activity. It is important to note that cash includes currency and cash equivalents. It is not just coins and banknotes. You see the following in the cash and cash equivalents category: checking and savings accounts, as well as short-term, highly liquid investments easily converted into cash with very little risk of loss. An example of a cash equivalent would be a short-term treasury bill that is government issued, very close to maturity, and has very little risk associated with it. Let's look at the real-world example, the cash flow statement of Tesla. Tesla is a publicly traded company and has its financial statements available on their website. The first section of the statement of cash flows is cash flows from operating activities. Note that Tesla uses the indirect cash flows method of reporting operating cash flows. We will take a closer look at the cash flow methods of reporting in a separate video. The second section is cash flows from investing activities. Note that Tesla reports purchases of property and equipment, solar energy systems, and intangible assets in this section. Note that cash receipts of government grants and cash outflows from business combinations are also reported in this section. The third section is cash flows from financing activities. Some of the items in this section are proceeds from insurance of common stock, convertible and other debt, and principal payments of finance leases. The total cash and cash equivalents are reported at the bottom of the statement. Let's take a closer look at the totals and make sure that total cash on statement of cash flows is the same as on the balance sheet. If you don't know or don't remember how financial statements are integrated, I'd suggest watching the video Integrated Financial Statements. I am posting the link here and in the description to this video. You may notice that totals on the statement of cash flows and the balance sheet are slightly different. The difference is because the totals on the statement of cash flows include restricted cash. Restricted cash is not reported on the balance sheet with cash and cash equivalents. Tesla offers a reconciliation in the notes to its financial statements to help users of financial statements to understand the difference. Part of the restricted cash is included in prepaid expenses and other current assets, and part is included in other non-current assets. When restricted cash is added to the balance of cash and cash equivalents on the balance sheet, the totals match cash reported on the statement of cash flows. That's all for today. Hope you found this video helpful. Don't forget to like, subscribe, and share this video with others who are interested in learning accounting. In the next video, we are going to discuss two methods of reporting operating cash flows, direct and indirect methods. I will see you soon.